Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge here to give you a rundown of current market price action and notable events for April 6th, 2026. It's been a while, everybody, since we've done a strategy of the day update. So let's just get right into it. We're going to keep them quicker, simpler, keep them more technically focused. And today we're going to break down. Let's start off with May corn. The daily chart up here for May corn, you can see that price action over the last couple weeks has been rather sideways, right? Holding support around that 450 area. That 18-day moving average on the rally starting this year from January was really one of those indicating technicals of that uptrend that failed, unfortunately, back there at the end of March as we closed below. We have started to fall back into the old range that the market was trading in into last harvest and into the end of last year, down below that 455, 460 area. Big technical area down around 445 where that 100-day and 55-day moving average are, and that downward sloping trend line that was resistance against the highs until we broke out of it there in March. You can see that yellow trend line against the highs there, broke out of it, and now coming down proverbially, now testing it as support. There is larger upward sloping trend line against the lows that comes in around the 430 area. That is also where the 200-day moving average is. We are a bit oversold on the daily RSI, but while below that 18-day moving average, the market really was in an uptrend, failed that uptrend, and started to roll over here in the near term. And it seems like the market is pulling back towards that 445 and 430 area as the next, supportive areas on the way back down off these highs. Remember, everything we talk about today is just my own opinion and not a direct trade recommendation. And trading futures involves risk and is not suitable for all investors. But if you do want to get in touch with somebody like myself to talk to them about trading futures and what managing that kind of risk on the board here means for you, my number there in the bottom right-hand corner of the screen, as well as my email, Facebook, and Twitter handle that you can get in contact with me. May soybeans, let's not get too hasty. December corn, very similar levels here to the May corn. In fact, you just shift the price action a little bit higher. You just shift that price action a little bit higher there, and you're still talking about breaking back below that 18-day moving average, still well above that old swing or the old range highs, that 470 area. So a pullback in December corn towards 470 to 460, that might correlate there closely with the pullback in that May corn towards that 445 to 440 area in the near term. But we are, obviously anticipating, or I'm anticipating, I should say, December corn remaining, relatively better bid. And certainly, where I was just looking at, there's new crop, old crop. Old crop, new crop here, July, December corn. You can see her continues to build that carry into the chart here as we continue to head towards full carry, which continues to keep that December contract a little bit better bid to your old or your old crop there. All right, moving on. May beans caught in this sideways price action. I mean, really not much to speak of in the very near term. Sorry, let me silence my phone. It's getting a little annoying to myself there. Hopefully you guys can hear those toots and those beeps, but I think you could. It's going to the end of the day here. We got a lot of messages coming in between our brokers over here at Zaner, and we're always talking about what we're seeing on the charts and what's developing. And there's a lot of headlines that go on and things that shift here towards the end of the day that shift our focus somewhat. So, all that being said, back below that 18-day moving average here on March 16th, we've been flagging in a proverbial bear flag below. We've seen a similar kind of very slow turning boat and building of support. We've seen it in corn actually before. That was the decline back in January. We had a very similar kind of like bear flag that just ended up actually becoming like an uptrend. I'm not saying that that's the case here for soybeans because while we are below that 18-day moving average, I think the pressure is and the risk is to the downside, even though we are quite oversold on the daily RSI. I think the market could, there's a threat here that back below 1160, back below 1152 lows from April 1st. I think this market does break down, and I don't think there's much in the way down towards that 100-day moving average at 1127, that 1120 area. That if we actually look at the daily chart down there, there's a bit of a congestion zone, right? There's old highs that maybe broke out of and now support. But more importantly than the $11 level, just below that, where the 200-day moving average is, upward sloping trend lines from contract lows through those areas coming around 1080. I'm not saying we're going down there, but you can see where the support comes in. And if it's anything like the decline we had back through December, right, we're going to be falling a few more pennies off these highs. To find some kind of maybe new trend line here. But nevertheless, if this bear flag breaks down, we know where to look. I think 1125 to 1120 is the next area, then $11 below that for support to the downside. November soybeans holding up above the 18-day moving average. I mean, it's like a tale of two different charts here, that old and new crop. A definitely different look here for new crop soybeans, trying to maybe even break out above that 18-day moving average. And maintaining a proverbial uptrend. We are still, I think, over the last couple of days within a inside price action. But when you take a look here at old new crop beans, you can see how we really sold off. Right, we were 80 cents over. Now we're only 25 cents over. That 50 cent decline here, 55-cent decline, is a big reason why you're seeing new crop beans very well bid, maintaining pressure, and in a market I think where maybe some of those acres and some other things might still be in question for soybeans because we were thinking that I think the at least I know here over at Zaner we're thinking we might get a shift towards those beans, and if that doesn't come with weather events this year or reasons to think that acreage could shift towards beans here, maybe this late in the game, is not there. Of course, we're going to continue to watch export markets as reasons and other, fundamental reasons why there is demand out there further this year and into new crop. But nevertheless, the 18-day moving average in the short term, a tale of two beans here. Depending on which chart you look at. So continue to watch that. One of these is gonna, one of them is the tail and one is the dog that's wagging it. We'll keep a close eye on that. Wheat here in the Chicago contract back below the $6 figure, back below that 18-day moving average. I mean, I don't see any reason why we couldn't be basing here for a breakout higher again. But yeah, you break down to this trend line support, this 18-day, we're below. The next area of support I think is down here around this 460, 450, or excuse me, 560, 555 area. Below there, that downward sloping trend line, takes you all the way back down to contract lows. So, I think you really got to kind of hold around that 555, 560 area. Otherwise, right, this could be dire straits here for wheat, and I don't think there's much difference there when you look at the KC contract either, right? You break below $6, it kind of feels like it's down to 560 here in the near term, if it wants to continue lower. You hate to see it, but and I hate to be the bearer of bad news, but I do think it could be the kind of the next thing around the table. So. Yeah, watch out again. May corn there, that double bottom here for this last the last few trading sessions into that 100-day and 200-day and 55-day moving average. I had the daily. My apologies there, folks. I had the daily nearest up there, which that's a continuous contract, but I I guess the important thing to show here on corn was that, hey, we are into that support, and that if it breaks down, you're back into you know, an old range that I think breaks another 10 to 15 cents lower quickly if you get below this major area with major moving averages. You are oversold here in the daily RSI, so again, if that support gives way, heads up. Beans, they're still holding that support, but if it gives way, heads up, right? There's reason to concern and for the market to maybe break on down lower, but we are staying green here in the last trading session. But with relatively inside trade over the last couple of days, it's hard to make a call in any way. So with all that being said, everybody, thanks for joining me here today for another Strategy of the Day update. You can get in touch with me over here at Zaner at 312-801-4231, at Daniel Hussey Jr. on X, Dan SOTD on Facebook, and dhussey@zaner.com. Have a good day, everybody, and we'll be back with you as price action develops.